Good morning, everyone. We're going to fire it up. All right. U.S. stocks had quite a decent day yesterday. In fact, we were even a little bit higher earlier, a little bit before the close. Solid rally, considering some of our local action yesterday. We also had the Dow, which closed another record high. This time, finally led by some of the cyclical counters, which I think is really important. Yesterday was the first day that we saw miners actually trade well. On the back of those Chinese inflation numbers, we're seeing a bit of a bump up in a lot of the physicals over the last few days. We've had copper, which has run 10 or 12 cents. We've had gold prices, which have really run hard. Platinum's had a nice bounce. Oil prices has made a small tick up, but generally, the stocks hadn't really been following them so closely. So now to have some outperformance from the actual equities is really important. All right, Asia session was mixed. I think with Japan obviously leading the way again, and as the yen continues its trek to 100 to 1 versus the dollar. Chinese imports came in higher than expected, and I believe they had a trade deficit on the back of that, which they're not expecting. Obviously, I take absolutely no value out of numbers that are coming out of China these days. I just, out of some of those type of numbers, just because, I just don't feel like you can trust them. But South Korea also under a bit of pressure right now. They're worried that we could get a test missile strike today, which is obviously could rattle markets a little bit today. So I think that's actually something that markets not really paying much attention to. And I think if they fire off a missile, I think markets will have some pretty reasonably intense reactions, even if they just shoot their little local neighbors there. So something to watch out for today on headlines. I think if you guys start to see some bigger rips around in the market today, or the next couple of days, that could be something that is ignited from a missile launch. So just keep an eye on that in the news headlines. Make sure that you're not on the wrong side of that if that does happen. Mr. Price had trading statement out earlier. Headline earnings per share are higher by more than 20%. So I think that's better than what was expected. Bloomberg expectations from consensus looks to be about 16%. So that could be a real positive this morning for not only Mr. Price but also for the retail sector. And then BHP CEO sees China's growth trending downward to 6% after 2 years, which I don't think that's exactly news to anyone. So anyway, all right, in the market data front today, we had obviously had a lot of numbers out of China, which we've already talked about. Big beat on the imports number, small miss on the export number. Who knows if it's accurate? But we've got industrial production, industrial output out of a few of the countries in Europe later. And then we've got mortgage apps and out of the States later. And then we've got the Fed releasing minutes from the previous meeting, which is probably the biggest thing on the go today. So that'll only happen when we're closed. So not a whole lot to pay attention to in terms of market data on the day. All right, let's have a look at the maps. Okay, the first thing I wanted to have a look at here is the Aussie, and we're going to show this is a 30-day chart here, and you can see how we've really bottomed out over the last 4 or 5 sessions. We've kind of made a bit of a double bottom potentially over the past few sessions, and we've got a kind of a sort of resistance level to the upside. I mean, this is all over the past couple of days, and we kind of entered in this little consolidation pattern in the past 3 or 4 sessions. I think these are going to kind of be our two levels that we're going to look out for to see where we're going to move next. I mean, the level to the upside is at 34,420. Level down on the downside is about, I drew that line a little bit too high, let's call it 33, basically be breaking to new lows, so 33,978, anything below that level, really going to be where our risk range is. What I would like to point out is that, on a fall like that, when you start to get consolidation after a quite an extended move like that, typically you get a move into the same direction after the consolidation, and the reason why is because, if it is going to bounce, usually it has quite a rather reasonably sharp bounce. That's not that's just maybe a percentage play. But that being said, we'll also look at the targets here. That's a bad line. We'll look at the target for where we think the projected breakdown can be. And from the top of this pattern, like we talked about before, from 36,500 down to 34,750, we're looking at about almost 1,800 points to the downside. So we're really looking what could potentially be close to 33,000 down around here, and then maybe even if I get a little bit more detailed here, we can actually, we can add a little bit of a moving average in here, and we can show you where the 200-day is, which could be where we kind of finish off. So I'll show you that real quickly. And you can see there. So that's not that far away from where we're talking about our projected target to be. So I think realistically, if we do break to the downside on the 30-day, like we're talking about, below these support levels, I think we could trade down close to the 200-day moving average, which is kind of significantly lower than this right now. So something to watch out for. We'll keep you posted on that if we break those levels via Twitter. All right, next one I want to look at is Bidvest. We had talked about this a little bit before over I think a couple of days ago, just kind of throwing a heads up when the market was totally cratering. Here's the level that I think is best, that I prefer at 225. But there also is a little bit of, that's bad. There also is a little bit of support here around 228, which is right where we closed yesterday. I would say that this is going to be our risk range, somewhere between 2.25 and 228. This has been one of the stronger stocks on the maps, and if we back it out a little bit further, I believe this is also right at trendline support, somewhere up along those lines. So I think that 225 to 228 may be a decent little entry in Bidvest. It's been one of the stronger stocks as of recently, so probably worth a decent nibble if we get it around that level. All right. Next one I wanted to look at is CFR. CFR, we sent this one out on Twitter yesterday. As it broke through, there was some good money to be made after that. To me, this is a really, really significant break. We've talked about this level, 10 times. We tested it back here in February and made a huge bounce. And then we came out and tested it 3 days ago, made a nice bounce the next day, and then yesterday we totally ripped through this level. But you can see the significance of it in terms of several tests to the downside which held, and now we've finally broken it. Projecting a move through this line is potentially quite a vast amount of downside that we've got here. I mean, we're talking about potentially 8 to 9 rand of downside on CFR, which would put our target down close to $60, and sort of close to this level here. Which is not really an incredibly significant technical level, but kind of a projection for the downside would be all the way down to there. So I think if you can get a short on this morning, up closer to 68.5, maybe with a stop above a close above 69, I think it's quite a reasonable play, high probability play. Technically, this thing is really just broke down yesterday. All right, Naspers I'll show as well. Naspers yesterday looked like it was going to break all support. You can see there I could have drawn that level a touch higher. I'll just lift it up a bit. But we closed a couple days ago. I'm going to shorten this up just so we can see it a bit better. But we closed a couple days ago, 3 sessions ago, right at trendline support here at horizontal support, not trendline support, sorry, at 555. We had a nice bounce the day before, and then yesterday, last night, night before last, we had a really nice trade action out of Tencent, which is up about 2.5%, obviously the biggest asset. And then yesterday there was just a local seller who really punished the share down all the way down to close to 550. We had a nice reversal at the end of the day, and we'll show the intraday move there, and you can see how we had this reversal and through this 55 level, which we fought for 55, which is that significant support. You can see we fought for it for a while, couldn't hold, we broke down, and then once we got back above it, I think on a closing basis, very significant that we closed above that level. So it's something to really watch out for. I think the risk reward of entering Naspers around here is really good, maybe with a stop here below 555. You can see we're starting to fight for this level. Long term, we're still holding supports, support and trend lines, and things still look bullish there for the long-term pattern in Naspers. All right. SPAR, I wanted to show here how we've we kind of broken below this recent uptrend that we've had, and I'll jump back a little bit further, maybe into more of into a 2-year chart here, and you can see how we are kind of looking a little bit head and shoulder-ish here on SPAR. Obviously, the right shoulder is a little lower. But you can see in terms of long-term pattern, it does look much more, does look a bit head and shoulder-ish. We've just broken recent trend line support here, or recent uptrend that we've been in, and I think that the level to watch out for will really be here about $107 on the neckline here. So something to watch closely. If we do come back down and test that level, we'll be keeping a close eye on it, and we'll notify you guys. But if this thing does break 107 here, I think it could be a very bearish pattern, and I think we may have to test 107 again anyway, just to catch a little bit of a bounce. All right, we'll look at a couple of international tickers here, and then we'll finish up for the day. We're going to look at IHG, which is Intercontinental Hotels. We really kind of testing major support here. The stock's been rallying nicely throughout the year. We kind of tested this level a few times here, just above 19. To me, this is still looking, relatively bullish, but we've obviously consolidated here. In fact, this pattern actually starting to look a little bit like a CFR. So just a level to really keep an eye on and watch out for around 1910. I would use more of the round figure at 19. If we break through that to the downside, could be a nice short. Could have a lot of room to the downside. Potentially $1.50 or more. But if we start to hold this level, also may be a decent little place to jump on the back and get along. And then another stock that I've shown a couple times here, it's kind of been ripping around a little bit back and forth. I personally think that this thing has been trading really well. It's given us I think it could be giving us a good little opportunity to pick it up here. That's Google. You can see we're right at support here at around 772. We are, if you're looking a little bit longer term, you can see here we're also holding support. I'll just run it a little bit more recently, but you can see here how it's also right at trendline support as well. So I think the risk reward here for Google is quite good. You could probably put on a nice tight stop, maybe for $5 or so on a Google to the long side, and get some exposure here on the Nasdaq and some tech stocks. And that's it for today, guys. Thanks a lot.